Hi, this is Stuart Weems, and welcome to the last Investopoly podcast for 2019. My goal is to share simple, easy to understand strategies, insights, and tips to help you master the game of building wealth. And in this episode, I'd like to talk about how difficult personal risk protection insurance is becoming to get in place. So when I talk about personal risk protection insurance, I'm talking about income protection insurance, life, and total and permanent disability insurance, which is TPD, the acronym TPD. And the problem or the challenge that we've had is really twofold over the last, say, 5 years. Firstly, premiums have been increasing significantly for these types of insurances. And then also getting new cover has been very difficult. So unless you're in absolute perfect health, it's always been a challenge, or it's become an increasing challenge, I should say, to get a clean policy without any exclusions and so forth. So I thought I'd talk through what we're observing and what you can do about it. What are the potential solutions to this problem? So firstly, of course, insurance companies have a pretty bad name, and that certainly hadn't been helped as a result of the Banking Royal Commission and the stories that certainly came out of that, and actually resulted in some charges and fines this year. So, the Royal Commission hearings occurred mostly through 2018, and then as a result of Commissioner Haynes' recommendations, ASIC and the government has been prosecuting the insurance companies. And so there's been lots of issues around unethical sales tactics, unreasonably denying paying benefits, claim benefits, and these sorts of things. Now, I'm not sticking up for the insurance companies by any stretch of the imagination. In fact, their behaviour has been bordering on criminal, I think, in lots of situations. However, when it comes to insurance, it's the key driver of problems typically is the client doesn't really understand the quality of the product that they're buying. It's really important. So when it comes to insurance, the advantage of no questions asked might seem really convenient, but really isn't in a person's favour. So when you see those ads on TV, no questions asked, no medical tests, approved over the phone, those sorts of things. It might sound great and easy to get, but really what you want as an insured person is comprehensive underwriting. So that is that they ask all the questions, undertake medical checks, review your medical history and so on, do a thorough check before putting the premium into force, because that means it provides less room for them to use the excuse of a pre-existing condition, or we didn't know that at the time of giving you cover, as a means to get out of paying a benefit, which is probably the most common situation that came out of the Royal Commission. Was the product just wasn't fully underwritten, a professional could have told that person, that client, that the cover really wasn't that deep, and it was expensive, and they really didn't get much value for money there. Which brings me in to really the other consideration, which is really the quality of the product. And when we talk about quality with respect to insurances, we're talking about the terms and conditions, and particularly definitions within the policy document. And these go to how comprehensive the cover is, and that then feeds into how likely are you to get a claim approved in the event of requiring a benefit payment. So, you want that quality, you want the insurance fully underwritten, and if you're doing that, that'll solve most of your problems. So that's, the insurance has got a bad name because I think that people just haven't received good quality advice when taking this out. So what's changed? Well, we've found that the underwriting process has become arguably over stringent. There's almost an absence of common sense when looking at a client situation, and even the most minor issues have caused problems in terms of getting coverage. And really, if during the underwriting process an insurer believes you've got a health condition, a pre-existing health condition, there's really four things that they can do. They can approve the cover anyway and give you clean cover, which is very unlikely. The second option is they can add an exclusion to the policy. So if you've got knee problems, for example, you might get a right knee exclusion, right or left knee exclusion. So therefore, if you are unable to work as a result of your knee injury, you don't get cover. But, if you're in a car accident and injure your back, you will be covered for something like that, for example. So you can have an exclusion. The third option is a loading. So they might just say, look, we'll give you the full coverage, but we're going to add a 50% loading onto the premium, so we'll charge you a much higher premium. And the fourth option is a decline. That is, they decline to give you any cover. The most common outcome when a insurer identifies a pre-existing health condition is either an exclusion or a decline. Loadings happen and they occur every now and again, but they aren't that common. And so even for, inconsequential, minor, asymptomatic health conditions can still result in these sorts of exclusions. And this is the frustrating thing, right, is that even, if I'm 45, I'm in pretty good health, if I went for insurance, I'm sure they'll find something that they would exclude as a result of something that's completely inconsequential. And that, as I said, that poses a problem because sometimes the exclusion is so problematic that it really does reduce the level of cover, and therefore people find themselves not able to get insurance. So let me give you examples. I've got 4 examples to share with you. We had a client that liked to get massages, just sort of relaxation massages, not by a physiotherapist or anything like that. It was just something that they did spasmodically because they really enjoyed it. It was a relaxation exercise. And the insurer slapped a back exclusion, or tried to slap a back exclusion on his policy. We actually didn't accept it for reasons that I'll go into in a second. But that's just ridiculous. Another example was that a client went through a real intense study period which required her to do a lot of typing, and as a result had a sort of tennis elbow injury. And the injury was treated, it was done with, the injury was not ongoing, the client was symptom-free for a long period of time. She got an elbow exclusion in her policy. Another client just recently has regular chiropractic visits for preventative reasons only, not for treatment of an injury, an existing injury. It's just because the client plays a lot of sport, and he received a spine exclusion, which is just nonsensical. And my last example is we had another client where the insurer wanted to reduce his benefit period to only 5 years. Normally the benefit period is out to age 65. So if you're 40 applying for insurance and you're 40 years of age, then you've got 25 years of cover, for example. Well, this insurer wanted just to reduce the benefit to a finite 5 years and add a 75% loading. So firstly, the benefit period is very, very short, arguably just meaningless. But they also wanted to almost charge twice as much in terms of a premium, just because the client worked long hours and had high cholesterol. It's ridiculous. And we get these examples every day. It's really becoming really challenging to get insurance, personal risk protection insurance, unless you have an absolutely impeccably clean bill of health. The other problem with insurance is mental health, and it's becoming a real challenge. Mental health conditions are the third most common cause of TPD claims, so total and permanent disability, and the second most common cause of income protection claims. The first is cancer events. Insurers are becoming more conscious about these risks, and mental health exclusions and even declines for insurance as a result of mental health conditions are becoming increasingly common. So we've had situations where clients have proactively attended a counsellor, maybe because of a death of a family member or a marital breakdown or those sorts of things, and the insurer has included an exclusion in their insurance policy just because they're being proactive. I mean, surely if someone's being proactive, aren't they demonstrating good mental health practices by, going out and talking to people and getting some support and those? In a way, maybe these sorts of people that exhibit these sorts of behaviours should be getting premium discounts rather than exclusions on their insurances. So people need to be aware if they go to their GP and talk about some mental health issues, attend a counsellor or undertake treatment for depression or anxiety, there's a pretty good chance that it will negatively impact their future insurability. That is, that it'll come out under an assessment. And look, the insurers put a lot of information out there that to say that they're not heavy-handed with assessing applications where clients have had history of mental health, which could be just, as I said, attending a counsellor because of the death in a family. It could be something as understandable as that. Anyway, the insurers have these glossy brochures saying, look, we're not discriminating against people that seek treatment or anything like that. But the reality is completely the reverse in our experience. What we're seeing is that even with the mere appearance of a possible mental health issue results in exclusion at a minimum. And given that almost half, according to research, almost half of the total population will experience a mental health condition at some point during their lifetime, the insurance industry's approach to this is quite worrying, because in some degree it could actually discourage people from seeking treatment, and that outcome would be terrible, be a very poor outcome. So be careful around mental health challenges. There's probably not much you can do from a prevention perspective necessarily, but understand that it will impact on your future insurability. So what can you do about this, given it's so tight, and it's really hard to get a clean level of insurance cover? What can you do about this? Well, firstly, if you've got existing insurance cover and you're considering cancelling or reducing it, just think very carefully about it. And in fact, you probably should assume that you'll never be able to replace that cover. Now, you might be in perfect health, and in fact, you might be able to replace the cover. Or certainly if you're in your 30s or 20s, the chances of getting insurance cover in place is a lot higher. But if you're older, if you're in your 40s, even 50s, very difficult to do. So once you cancel it, you might not be able to get it back again. The second tip is, if you are young and if you are in really good health, sometimes it's better to lock that cover in now so that it doesn't have any exclusions or loadings. If you leave it too late in life, possibly you won't be able to get insurance, or the insurance that you get just won't give you that deep level of cover. Now, thirdly, some exclusions aren't that big a deal. If I've got a known issue with my left knee, for example, I can proactively manage that issue. And it's specific to one part of my body, that's not such a big deal. And what we have insurance is really for unknown events or unknown injuries or illnesses rather than known injury or illnesses. So if we get a knee exclusion, for example, we're less concerned. Whereas if we have a spine, a back lumbar exclusion, then that can be a problem, because really you could be in a car accident and you suffer some injuries so you can't work. The insurance company could potentially say, well, hang on, you suffered the injury because you've got a back problem, and that's the issue. That's why you're not working, and therefore we won't pay a benefit. So if you get an exclusion, some you should be concerned about because they materially reduce the depth and coverage of a policy. Others aren't that big a deal. And again, similar, like a mental health exclusion is less of an issue. If we know that you're susceptible to potentially suffering those sorts of conditions, you can proactively manage that. What we're really worried about with insurance or covering insurance is things like cancers and those sorts of unknown medical issues that can occur in life. Another option is to look to larger industry super funds. So industry super funds have what's called group cover, which means that they go and get one insurance policy that covers all the super fund members, or at least all the super fund members that opt into insurance. And quite often they can have, you can get a sort of basic level of cover just by completing a really simple medical questionnaire. So if I looked at Australian Super, for example, if you apply for less than $800,000 of life and TPD cover and or less than $10,000 of income protection cover per month, then you only have to go through quite a streamlined application, and that they might not is not as thorough necessarily, and you might get some clean insurance that way. So that's always potentially an option. So every day of the week, we spend time helping clients determine what the right amount of cover to take out is, making sure policies are structured in a tax-effective manner, making sure we really understand the quality of insurance cover and products, and then help clients navigate that underwriting process so that they achieve the best possible outcomes for themselves. Most people don't have the skills, knowledge, and experience to do that themselves. And sometimes it might feel like the easiest path, that is, sorting it out yourself, not necessarily getting any advice, not involving a third party. But it's not until you need to make a claim that you realise that perhaps that isn't the right approach, and what you don't know can actually hurt you in the long run. So if you are arranging insurance, or if you are making changes to existing insurance, particularly in light of the current climate with underwriting, certainly do seek some independent advice in respect to that, because it could be certainly worthwhile. So that's it for this week, and also for this year. I'll take a break over the Christmas period, but thank you very much for listening into the podcast this year. I hope you've enjoyed the topics. I certainly spend plenty of time thinking about what to talk and write about each week. And I'll be back in January 2020 doing the podcast next year, as well as I am releasing another book next year. So I'll certainly, in around about April or May, and I'll certainly be talking more about that as well. So I hope you and your family have a fantastic Christmas time, get some time to take off and enjoy time with family and friends, and I look forward to talking to you again in the new year. Okay, bye for now.